Insights Market Pulse podcast. Let's join our Friday guests. It's Trader Nick in the United States and Awanda, Senior Market Analyst in London, Craig Earlham. Good afternoon, guys.
Hey, Johnny.
Good afternoon.
So I should say, as we are talking, we're actually watching a bit of Jerome Powell speaking in his fireside chat. Nick, I think you're across what he said so far. How are the markets reacting?
Well, as we kicked off today, very early New York session, got to the desk and the dollar was trading up, and now it's given back. At the time of recording this, of course, a lot of those gains, and that would perhaps suggest that some of the commentary from Jerome Powell, the market, is a little eased by it, and that would probably be accurate why the dollar is down and stock indices are up. One thing to point out here is that Jerome Powell, I've got a quote here so far. Of course, as you mentioned, we are recording this quite literally while his first speech is going on, and he's set to speak again later today. So we are kind of early to the overall points, but here's what I've got that I picked out from the speech so far. So on November 1st, he had a quote at the end of his press conference where he said, "The stance of policy is restrictive." Today, he has a quote here that I've got pulled up where it says, "The strong actions we have taken have moved our policy rate well into restrictive territory." Those are two different quotes saying kind of the same thing. It sounds like the first one, the stance of policy is restrictive, sounds like we're doing what we can to get this done. And the second one sounds a little bit more like we've done some restrictive policy and speaking in historical fashion, right? Looking back and saying, well, we've done a lot. And so that, I think, has the market a little bit excited so far. Of course, it is early in his commentary, and he did point out, core CPI is still well above expectations, all of the same things that we've said 500 times on the podcast since this whole rate hike stuff began. But I think what markets are really looking for in these speeches from Jerome Powell or from Fed officials across the committee is looking for easing in the commentary. And Jerome Powell, he was in a lighthearted mood as he took the stage here today. Jerome Powell, he's a soft-spoken older gentleman, and he usually is pretty monotone in his speech. So he was kind of just a different tone there, I think, that markets picked up on pretty quick. And also pointed out that the labor market is very, very healthy. He even pointed out that it's a great time to go out there and, get a job. I'm paraphrasing there. But again, overall, markets are liking what they're seeing here today. The S&P 500 is up. A lot of the currencies against the dollar are doing quite well. And it perhaps would suggest just a little bit of markets getting what they have wanted out of this commentary that he has today. They've been looking for further confirmation that is Jerome Powell and the committee, of course, actually becoming more dovish. Is that solid, or are they going to push back on recent market moves and say, we're definitely not out of the clear? Of course, they're always going to say something in there about, we're not where we want to be. They're not going to straight up say rate cuts, but pointing to some of the successes and calling what has been done, sufficiently restrictive, again, paraphrasing, is really important to note in terms of the change in narrative. And again, I think we're seeing markets react to that so far. So Craig, that's what I've gotten so far out of what Jerome Powell has to say. Is there anything I missed or anything that you're picking up on that I think, or that you think markets could be reacting to right now?
Yeah, I think the interesting thing with these is always that people pay a lot of attention to the detail, and the Fed knows that they pay a lot of attention to the detail, so they often pick their words very, very specifically in order to try and send a message without going over the top. And I do think there is elements to what he said that's designed to send a very clear message to the market. And the one sentence that I really picked up on was he said that he's prepared to tighten further if it becomes appropriate. And that's a big shift. If you think that 3 months ago when they released their last forecast, they had another rate hike actually penned into their forecasts and into the dot plot, to go from that in the space of 3 months to saying if it becomes appropriate suggests that they no longer believe it is appropriate as a committee. And on top of that, they're saying that at a time when bond yields are coming down. When he started this press conference, markets were pricing in a rate cut in May, and he still feels comfortable enough to say if it becomes appropriate. So he's happy to send this dovish message even with markets pricing in a rate cut in May. So that suggests that there has been a bit of a change of heart there. This pivot that we're talking about could come as early as December. And that's obviously that's in 2 weeks' time, the meeting. So I think these comments, while nuanced, they're quite powerful, and I think you can see that impact that it's having on the dollar, as you say. And while he's been talking, markets have actually brought forward their expectations for that rate hike from May to April. Now, at this point in time, it's around 60% priced in, and the models are not always perfect as the event is happening. But it suggests that markets are going, do you know what? We think the ECB could move in March, April time. We think the Bank of Canada could move in March, April time. And now we think the Federal Reserve could move March or April time. So all of a sudden, we've gone from central banks pushing back against any rate cuts next year to end of first quarter, start of second, looking very, very likely, and central bankers not pushing back. And also in the last half hour or so, we've also heard from Goolsbee, who another policymaker on the Fed, and he said a couple of things which are interesting as well. He said we're on track to 2% inflation, and inflation is coming down exactly as we want. A lot of inflation progress is also coming from supply shocks, suggesting that the easing up of supply shocks, lower delivery times, therefore the impact it has on inventories, the impact it has on costs is also contributed to inflation. And also, there's no evidence we've stalled at 3% inflation. Now, when you compare that with the language we've had previously, and the language which we've used before as well, which is it's going to be a lot harder to get from 4 to 2 than it was to get from 8 to 4, no evidence we've stalled at 3% inflation at a time, literally at the time, just before when Powell is making these comments. It does seem that we've got a shift. Maybe not a full pivot yet, but we may get a pivot in 2 weeks' time on the basis of what we've heard today.
Yeah, it's a good point, Craig, and I think definitely some clear, although slight, some clear distinctions in the words selected with what we're hearing from Jerome Powell at this time. I also do want to just make a quick nod in terms of economic data coming down. We did have PMI numbers this morning show some cooling as well, and I still think that we are, for now, probably until the end of the year, seeing cooling in the economy as still a positive. And again, you add that on to what we heard from Jerome Powell. I mean, here you have a story where economic data is cooling, inflation is cooling, and maybe we just leave 2024 to 2024 in terms of at what point does bad news become actually bad news. But I don't think we're quite there. I think that, again, as Jerome Powell points out, we're still above average or above targets, but you continue to see those numbers come in the way they're coming in. It like you're pointing out, that 3% may not be as big of a barrier as people previously had thought. So very interesting setup for the end of the year, I think.